Live from Pier 3 in San Francisco, welcome to Bloomberg West, where we cover the global technology and media companies that are reshaping our world. I'm Emily Chang. Our focus is on innovation, technology, and the future of business. Let's get straight to the rundown. It started a half hour late and ended right where it began, at about $38 a share. Facebook's first day of trading as a public company went off without a pop. So does that mean the price was right or wrong? Before the first trade came, the Bell founder, Mark Zuckerberg, ringing in opening day from Hacker Square at Facebook headquarters and telling the world it's not Facebook's mission to be a public company. And the night before the social network became a public network, hundreds of staffers didn't sleep, instead taking part in one of the company's legendary all-night hackathons. We talked to someone who was there. But first, to the lead. Facebook is now officially a publicly traded company. But after a half-hour delay in the opening trade at the NASDAQ, the social network did not soar like some of its predecessors. Facebook briefly got up to a high of about $45 a share, but dropped down dramatically, closing just above its IPO price at $38.23 a share. Underwriters did step in to buoy the price. Shares of Morgan Stanley, the lead underwriter on the deal, closed slightly down. Shares of NASDAQ closed down more than 4%. And late today, the SEC announced it will look into what might have gone wrong, saying staff will review the incident with NASDAQ to determine its cause and steps that will be taken to address it. We will discuss the, quote, incident in a moment, but first, let's take a look at how the day started at Facebook on the much anticipated day of its IPO. Before dawn at Facebook, the parking lot full after an overnight hackathon. Hundreds of Facebook employees hacking away at new projects of their choice to celebrate a coming of age for the social network.
The Facebook listing is a decade-defining listing for NASDAQ. It's a decade-defining company.
By sunrise, choppers flying overhead. The NASDAQ had rolled out the red carpet for a bell ringing unlike any other. Executives presenting what else but a NASDAQ hoodie to the guy who made it all happen.
But this is the first time we're giving out the NASDAQ hoodie. NASDAQ Facebook hoodie.
After the bell, hugs and smiles all round. Facebook employees even hacked the NASDAQ button, so the status update showed up simultaneously on Zuckerberg's Facebook timeline. But at 11 a.m. Eastern, when the stock was supposed to start trading, nothing happened.
The NASDAQ has said that it's experiencing a delay in trying to open this stock right now. Again, it could be
apparently, the exchange was having problems filling an unprecedented amount of orders. And now it's 11:30. Facebook still hasn't started trading. It's a half hour late. We're just here waiting.
We have a trade. We have a trade. $42. It just opened at $42.
There we go.
And Facebook was off. Not with a tremendous pop like some previous tech IPOs, but with far more enthusiasm. You got into Facebook just a year ago, and you still made money.
You know, ultimately, the price will be determined by supply and demand, and we haven't seen a stock like Facebook in a long, long time.
You're also in a number of hot private companies, Twitter, Palantir, Dropbox. Do you think any of those could be the next Facebook?
It's always dangerous to say that something could be the next, something to the success of Facebook.
Is Facebook a once-in-a-decade company or a once-in-a-lifetime company?
We'll see. I mean, it's certainly a once-in-a-decade company today. And now I think the rest of the story needs to be written.
But why didn't the success of Facebook, the company, translate into a better stock debut? Our Bloomberg West editor-at-large, Corey Johnson, has a lot of experience with this process. He's been inside a company as it goes public, and as a former hedge fund portfolio manager, he has bought IPO shares as well. So what happened here? Was this a NASDAQ problem or a Facebook problem?
Well, no. So a number of things happened. The opening was weird from the start. I think when they announced that they were going to have a time to open the stock, that's a very non-standard way of doing things. The time to open a stock is when the market opens at 9:30 in New York.
Well, it seemed like it was pretty organized, though, in the days leading up to this. The books closed a couple of days before. They had a lot of time to sort out the orders, and yet on the day of, they're still having trouble canceling, changing orders in that moment.
And that's not uncommon. I mean, you know, it wasn't all that long ago. A lot of this was quite literally done on paper, where they were trying to match orders and see who was where and what orders are coming into the market. There have been some really important structural changes, not least of which a FINRA rule that changed where no longer could people wanted to buy the stock say, I'll buy it at any price. Give me 1,000 shares. Those kinds of orders in an IPO eventually cause a lot of people to lose a lot of money, but those are the kinds of orders that would drive share prices way up in the very initial trades right after an IPO. That's against the rules now, and that's one of the reasons I think that we didn't see the massive, massive pop in the stock.
Well, we do know that the underwriters also stepped in to keep it from breaking its IPO price. You wonder what happened if they didn't do that today.
When they won't be around to do that on Monday. I mean, you know, it is a common practice of when a deal goes bad for a good underwriter to put some of their own capital to work, step up there and defend the stock. And you know, as you know, as these words come out of my mouth, I always talk about Bloomberg Westing. We don't talk about stocks. It's not a show for investing and just trading dots and lines and charts. It's about understanding companies, understanding products. Well, this is just purely a market dynamic function where people were treating this thing like it was a number, completely divorced of what the company is, how many products they sell, the value of those products. People want to trade this thing just like whether it was gold or whether it was wheat prices or whether it was Facebook shares. And I think that that's sort of the heart of the problem.
It was also quite a big float as well, so that may have factored in here. Also, Corey Johnson, thanks so much for that perspective. Now, still, it was a day Facebook employees won't soon forget. Before the stock started trading, thousands of them gathered at the company's Menlo Park headquarters for the remote bell ringing. Mark Zuckerberg took the opportunity to address his staff and the world.
All right. Now, I just want to say a few things, and then we'll ring this bell and we'll get back to work. Right now, this all seems like a big deal. Going public is an important milestone in our history. But here's the thing. Our mission isn't to be a public company. Our mission is to make the world more open and connected. In the past 8 years, all of you out there have built the largest community in the history of the world. You've done amazing things that we never would have dreamed of. And I can't wait to see what you guys all do going forward. Yeah. So, on this special day, on behalf of everyone at Facebook, I just want to say to all the people out there who use Facebook and our products, thank you.
Bit of emotion there from Mark Zuckerberg. Now, our senior West Coast correspondent, John Ehrlichman, has been in Menlo Park at Facebook headquarters all day long. So, John, what's been the mood out there? I know you've been there since before sunrise, but now that the day is done, has the mood dampened at all, given the stock's performance?
Well, look, heading into this day, you knew that everyone at Facebook was going to be very cautious, and they follow the rules. You know, if Facebook wants them to be out there talking to the press or smiling as they were when they were on camera for this bell ringing, they absolutely are. But a lot of this company is about being behind the scenes and building up this business. I'm glad people got a chance to hear those full comments from Mark Zuckerberg because, as Corey said, you really want to understand the story behind Facebook. While everyone on Wall Street was wondering today if Facebook shares would finish at $42 or $40 or $38, the reality is what Mark Zuckerberg is saying is we have benefited from betting on the big picture. And certainly from an investor standpoint, now everybody's on the same page. Amazon, Apple, Facebook, and Google. But the reason they had a hackathon last night was just to reinforce that message that, look, some of our best ideas have come from going out there and building better products. And that is exactly what Facebook has to do right now. But it is a reminder to people that the man who has the voting control is thinking long term. He's not thinking quarter to quarter, and perhaps just wanted to get that message across to potential investors.
And Facebook really didn't even take a pause today. They announced another acquisition today. They're buying Karma, a gift buying site.
Yeah, that hasn't been around long. We know Mark Zuckerberg, when he sees something he wants, he generally likes to pounce. But the most important part of this story is this is tied to the whole phone strategy. The fact that it's about getting friends to share gifts, but doing it via your phone. I mean, you think of the Instagram deal, you think of this deal, you think of, well, maybe some happy campers there. You think of the deal recently to acquire Glancy. all of this has to do with what came up in a big way on the roadshow. The fact that they said a lot of our user base is moving to the phone. We don't know how that affects the advertising model, where here they are going after a lot of deals that will help them in that model now that they are a public company. Emily?
All right, John. Lots to come from Facebook, I am sure. Thank you. Coming up, Facebook's all-night hackathons have become the stuff of legend, with energy drinks and takeout food fueling coders hard at work on the social network's next big product. That is how many Facebook staffers spent last night, and we have details from the inside coming up. And for the latest tech news, don't forget to check out our tech channel, Bloomberg.com/technology. Welcome back. I'm Emily Chang. The night before the IPO, Facebook employees participated in a company tradition, the all-night hackathon. It's usually reserved for engineers to bat around new ideas, concepts, and coding. But last night's celebration was open to everyone at the company and a few select others. David Z, a partner at Greylock and an early Facebook backer, was there. Some doubted his investment in Facebook back in 2006, but that stake is now worth more than $1 billion. David, you must be tired. I'm tired, so you must be really tired.
It's a long, exciting day. You know, they came off the energy of the hackathon right into the launching of the NASDAQ, and pretty soon after that, they were back to work again. So
yeah, tell me about the mood. I mean, what was it like on the inside? Was there a feeling that this was something historic, or was it, you know, just another day?
No, there definitely was an energy. I mean, there was the energy from the creative process of the hackathon and people having been up all night for that, and that sort of rolled over into an excitement. And I think there was like the right combination of celebrating the moment and feeling really good about it, but then sticking to the mantra of stay focused and keep hacking.
You know, I thought it's so funny looking back. You invested in 2006, and you were ridiculed for this investment. And look where it is now. I mean, how does that feel to be able to say, I was right?
Yeah, you know, I feel mostly having been an operator myself and been in startups for a long while, I feel really happy for the team there. And, you know, back in 2006 when we invested, it was about 7 million users. They were all college, and it was all closed, only in the U.S. And they just started revenue, so there was, you know, de minimis revenue. So to get to now with over 900,000 users, 20 minutes a day on average per user, you know, $3.7 billion revenue, I think if you've ever been in a startup, you just feel happy for them and what they're achieving.
Now, obviously, you watched how the stock performed today. It didn't pop like some people thought it would, closing just about its offering price. How concerned are you about that?
You know, I've been lucky enough to be involved with the IPO of Pandora last year, the IPO of LinkedIn. Last year I was on the board, and now being involved with Facebook. I've seen the gamut, and I think the real thing is, you can't really worry about what the market says at any given time. I mean, our focus is go create value for your users, go create value for your customers, and that will create value for the shareholders. And over time, the market, you know, the market does what it does in any short-term period, but if you create value, the market sees it. And I think we've seen that in LinkedIn as it's put up its numbers over consecutive quarters. People have realized the value that's there, and I think we're going to see the same thing with Facebook.
LinkedIn's up, you know, now more than 100%, I believe. But Facebook still, you have to admit, has a lot to prove. I mean, in mobile, in terms of diversifying revenue, right?
Yeah. Well, I think that for companies, it's always about staying on the innovative edge. And so, you know, how do you stay innovating and keeping great talent inside your company? And you've seen that in acquisitions with Facebook. And we see that it's a culture that innovates. And if that happens, then I think the other things work out. What
would you like to see from Facebook in terms of building out the mobile business, for example? Right now, they don't really make any money there.
You know, I'm a big believer that mobile is a huge opportunity, and Facebook is already a leader in mobile, and it will continue to be. And every time we've seen in the web, from the early days in the 1990s, when I was an operator and product there, through, you know, 2000 and beyond, everyone doubted what the next thing was. And as long as you were the place where people wanted to be and where they cared about being and interacting with each other, you realized that the revenue parts figured themselves out. And whether it turned out to be virtual goods and credits in a Zynga kind of example, or subscriptions as part of it in a LinkedIn example, or advertising in all three cases, including Facebook, I think they'll figure that out because they're really smart and really innovative.
What do you think about the idea of sponsored stories as another big revenue streams, or even e-commerce?
What I love is they're testing all these things and they're learning really quickly. And one of the things I loved about Mark from the very beginning is he's incredibly smart, but he's a learning machine. And he will learn and figure out all the problems. And Facebook, you know, we've seen so many changes in it over the years that we've been involved. It gives you a lot of faith that they don't get stuck in one point and they figure out what to do.
So you guys found the first Facebook. Can you find the next Facebook? Is there such a thing?
Yeah, I hope so. That's what our business is about, finding the next Facebook. So.
Where do you think it's going to come from? The next most promising company, the company of the next decade?
You know, I think some of the most exciting companies right now, honestly, Amelia, are happening on the enterprise side. We've seen the technologies that have been allowed Facebook and Google to scale coming to fruition on the enterprise side and being applied to enterprises by my partner Anil Bushri and Sheen Shamna and David Acharya. And there's companies like Workday and Tidemark and Cloudera that are huge companies that people are only just now recognizing how big they're going to be.
Right, and Workday potentially going public very soon, as we've been reporting. All right, David Z, partner at Greylock, great to have you today and get that inside perspective from IPO Day. It sounds like it was really exciting.
Thank you.
Coming up, the Facebook IPO has made Mark Zuckerberg one of the richest men in the world. Find out how he compares to some other tech titans, including the Google guys. Next. Welcome back. I'm Emily Chang. Today's Facebook IPO has made Mark Zuckerberg richer than Google's two co-founders. Zuckerberg is now worth $19.4 billion, according to Bloomberg's Billionaires Index, making him the 26th richest person in the world. Google's co-founders are right behind him, though. Larry Page is worth $19 billion, Sergey Brin worth about $18.9 billion, so really neck and neck. Zuckerberg sold 30 million of his more than 500 million Facebook shares in the IPO. That money will be used to pay his tax bill. A lot of comparisons have been made between Facebook and Google. Besides the amount of money their CEOs are making, the two companies are separated by a mere 7 miles, but a whole lot of history. It took Google's IPO in 2004 to prove that an internet company with a disruptive idea could even be profitable. Our editor-at-large, Corey Johnson, has more. Corey?
Yeah, Liz Beyer helped take Google through the IPO process in 2004, and before that was an analyst, has closely watched the process of many companies going public, and has taken that knowledge to start a company called the Class 5 Group, which guides companies through the IPO process. Liz joins me from Palo Alto and lovely Stanford University. Liz, I was really struck by what a good job Facebook seemed to do in this. There weren't any real big landmines. It was kind of the complete opposite of what we saw from Groupon and the like.
I think you're exactly right. It was 180 degrees away from Groupon. And I think what that says is that while Facebook can have a unique culture inside the walls of the campus, they understand what it means to be a public company, and they're willing to play the outside road really responsibly. It's, in my opinion, the right way to do it.
Yeah, I remember, you know, when Google went public, there was an attempt at a Dutch auction, an offering that eventually used a lot of investment banks, but trying to do things a little bit differently. Facebook didn't do that.
They didn't, and you know, every company, every set of founders gets to make their own decision. I personally believe that when you have a company that has such high brand recognition, an auction is a very safe way to go. But hats off to Facebook, because the biggest fear with a company like this is that you'll get huge amounts of orders from more or less unsophisticated investors who will forget to put a limit on it, and so you'll see a stock rocket up and then turn around and head right back down. Hooray that we didn't see that today. And that, again, that's what Google was trying to avoid and successfully avoided with its auction.
I also thought that they pursued the process of just filing documents and being, you know, disclosing things like, hey, we get no revenue from mobile, instead of trying to excite people about the potential for revenue from mobile, or trying to sort of, I don't know, stir a kind of froth that was probably already waiting for them.
I think having seasoned pros like Sheryl Sandberg and like Dave Ebersman really in charge of this IPO process made a tremendous difference. And, you know, look how much money they were successfully able to raise because they did this without frills.
Well, and isn't that the point? I mean, at the end of the day, the IPO process isn't about creating an investment vehicle or getting something that runs like crazy right afterwards, but is about raising money for the war chest of the company going public.
That's exactly right. And so, again, looking at where Facebook opened and closed today, it looks a little bit like they raised just about the largest amount of money they could have at this point. And now the question and the opportunity is, what do they do with what they have in the war chest over the coming, weeks, months, years? They certainly put themselves in a very strong position.
Yeah, when you meet with companies, I wonder what's sort of their biggest misconception about the process of going public or the purpose of going public? What's the sort of the advice you find yourself giving over and over again?
That's exactly the right question, because every company goes public for a different reason. Some go because they need the money to build a new fab or to expand. Some go because they've got venture investors who want their money out. So the most important thing for any company going through the process is to understand, aside from just raising money, what is it that you're really trying to accomplish here? Is it about liquidity for employees, or is it about stocking the coffers with as much as you possibly can because you've got some big competitors who have a lot of money? So the thing I work with companies most on right at the very beginning is why and why now. Because if you know the answer to those things, the whole process will fall into line much more easily.
All right, so what did you make of Hoodiegate?
It goes both ways. On one hand, Mark Zuckerberg has been very clear from the get-go who he is, how he thinks, how he controls this company. And Hoodiegate is, you know what, you don't like the way he runs the business? Don't buy the stock. That said, it doesn't hurt to be a tiny bit respectful when you're going out to raise money from public investors, from big institutions. So the fact that he wore a hoodie, it's not really, on the margin, it's irrelevant. I'm sorry, in reality, it's in bulk, it's irrelevant. On the margin, it would have been nice to put on a suit and tie. I will tell you that when we went out on the Google Roadshow, the founders showed up in New York without ties and without jackets, and literally 10 minutes into the first meeting, they sent their associates off to buy them each a suit, because they realized that's just the way to do it when you're talking to Wall Street.
That's a good story. I'd never heard that one before.
It's completely true.
It was a non-visual way for Zuck to actually say, I'm focused on the business first, though. I thought that message came across.
What he wears is so much less important than what he does and how he runs the business. And again, it wasn't just Zuck. It was Zuck and the very professional Sheryl and the very professional Dave Ebersman. And so the combination is what made the difference. I'm not sure you'd want a whole group, dressed like the Grateful Dead of 20 years ago, out raising money. But having the founder say, I'm not a financial guy, is fine.
Liz Beyer, thank you very much. Liz Beyer of the Class 5 Group, thanks a lot.
Thanks, Corey.
Thanks, Corey. We'll be right back with more of Bloomberg West next. You are watching Bloomberg West, where we focus on technology and the future of business. I'm Emily Chang with your Bloomberg Top Headlines. Get ready for a bigger screen on the iPhone. Apple has placed orders from suppliers for screens that are bigger than the current 3.5 inches. Steve Jobs reportedly worked on the redesigned phone before his death. The newest iPhone could debut by October. Former Yahoo CEO Scott Thompson is out of another high-profile gig. Thompson resigned from the board of S5 Networks effective immediately. He had been on the board since 2008. Thompson stepped down as Yahoo CEO last weekend after that controversy about a fake computer science degree on his resume. Shares of Autodesk tumbled the most in 3 years today. The stock was down about 13%. That was after the design software maker cut its current quarter forecast. Autodesk expects a continued slowdown in Europe, India, and Brazil to take a bite out of profits. And Yahoo is in talks to sell nearly half its stake in the Alibaba Group back to the company for about $7 billion. Alibaba has been trying to buy back the stake for more than a year. Yahoo has come close to selling before, but those deals fell through. This time, it may not work either. It would indeed be a complex transaction. Our Bloomberg technology reporter Brian Womack is here with all the details. Brian, what do you know about this?
It's amazing because this has gone on for a long time. It's been more than 2 years. This started under Carol in many ways, Carol Bartz, the former CEO that was fired just last September. And so here we are, and maybe we're getting closer to a deal, finally. We'll find out, because investors have watched this very closely, of course.
What do we know about Scott Thompson's involvement in this deal and Ross Levinson's potential involvement? I mean, he's only been in the job for a few days.
Yeah, I mean, we know that Scott Thompson had talked up how this deal, things are moving forward, etc. And, if the negotiations were moving forward because of the transition in CEO, seemingly things could progress. We'll find out. But definitely, it would be a big step for Yahoo.
How important is Alibaba to Yahoo?
Well, I mean, a lot of investors put this stake that they have in Alibaba at a big part of their valuation, like over $10 billion, and their $20 billion market cap. So this is a big deal for investors, and if they can monetize it and do a nice job, that's why the stock went up. They're hopeful it will do well.
Investors would be pretty happy about this,
yes,
then, you
definitely, because they've been waiting and waiting and waiting and talking about it, and finally, if they do get this sort of windfall, they could have maybe a dividend or at least a share buyback. We'll see. We'll see.
We'll see if Ross Levinson can be the one to close the deal after all this time. Brian Womack, thanks so much. Now back to our top story of the day. Facebook, of course, now a publicly traded company 8 years after Mark Zuckerberg started the social network in his Harvard dorm room. Our senior West Coast correspondent John Ehrlichman is outside Facebook where Zuckerberg rang the opening bell this morning. John, how's it going?
Emily, pretty good. And the Wall Street story today was how come the stock didn't go anywhere? But for Silicon Valley and the venture capitalists in this area, this is a huge event. And I want to get some perspective from George Zachary of Charles River Ventures, not an investor in Facebook, but in Twitter, Yammer, also in the social area. Give me your reaction to today's events.
I find it incredibly exciting. A lot of people are talking about the stock going to pop, but $110 billion of value got created. A company that changed the world got created. And, as an investor in Twitter, for example, how does a company like that view this event? With a lot of excitement and happiness. Twitter, like Facebook, is in the social space, and they look at other companies as proxies for value. So this is a great confirmation that Twitter's on a value creation path and it's worth a lot of money. Seen as an encouraging thing. What about the B word? Not billionaire, but bubble. If we had seen this opening day where this stock really had run up in a big way, what would have been your reaction? I'd be concerned that we're in the last phase of a bubble. I think we're in a bubble that's building. People think of bubbles as binary. They're not. It's a phase. It's a process. The end of a bubble is always when buyers of stock are borrowing money, debt, on basically margin to buy equity. We're not even close to that. And as far as where Facebook fits into the landscape now, you represent companies that I'm sure look at a public Facebook and say, maybe there's some employees that are tired of working there. Maybe they want to join a young startup. Do you think there's the possibility that people might flee Facebook? It matters what they're hungry for. If they're hungry for money, probably not. They probably made a ton of money. If they love the people they work with, probably not. But if they're looking for a new challenge, if they want to change the world themselves, if they want to be a founder, those are the people that should leave Facebook and go do something new. And obviously Facebook has done a huge amount of hiring over the last couple of years. Yeah. The possibility of those who have been here longer wanting to leave, is that, is that... It's a real possibility, but then again, it always comes down to what the person's hungry for. Do they want to change the world, or do they want to make money, or both? There are obviously a lot of people who saw the hackathon overnight and don't know that much about the Facebook story and said, what's the deal there? What was your reaction to them deciding to have their 31st hackathon on the eve of the IPO? Incredibly exciting. It's the spirit of Facebook. It's the spirit of Silicon Valley. It's all about one person being able to change something. What I loved about it is, unlike the most of the world who are in their cubes, in their inbox, like veal, we've got people spread out all over. They're collaborating with one another. It doesn't make a difference what you look like, where you came from. If you're smart and you can apply yourself, you can work in a group. To me, they were really inspiring pictures. That looked like a team of people as opposed to a group of employees. Is this the Facebook playbook? Is it a playbook they stole from some of the early players in Silicon Valley? Which part of it? This idea of the hacking culture, which Facebook has clearly chosen as their public identity right now. I mean, Yahoo had hackathons for years, too. That's right, but not necessarily company-wide. I think that's one of the key differences. It's a core part of Facebook as opposed to a bookend that you'd put on like, oh, now we have to do a hackathon.
Sure.
Now we have to do some hacking. So for me, it's the core spirit of Silicon Valley, the anti-establishment mentality. That's what the hacker mentality is.
Very quickly before we go, Pinterest, another hot company, did another financing yesterday, values the company at $1.5 billion. Do you think that financing would have gotten done if those investors knew that Facebook was going to go flat on its IPO
I do
day?
think. It's still flat at $110 billion.
Well said. George, thanks for joining us.
Thank you very much.
George Zachary of Charles River Ventures. Emily, I'll send it back to you in the studio.
Thanks, John. Now, when Facebook opened itself up to app developers a few years ago, the person tasked with bringing in the app business was Dave Morin. We hear from him next. As Facebook debuted on the NASDAQ, a company highly dependent on Facebook's app platform, Zynga, has had some trouble of its own. Its shares tanked, triggering circuit breakers to halt Zynga's trading not once but twice. Our Bloomberg West editor-at-large, Corey Johnson, has the explanation. Corey, what happened there?
Yeah, I mean, the stock was already down about 40% in the last 2 months, but take a look at what happened to the stock today. Perhaps in sympathy to the fact that the Facebook IPO was not creating a new standard for ridiculous valuations. It just created the standard that we knew it was going to create last night. So as the stock started to fall, suddenly the NASDAQ just couldn't handle all the orders for this stock and tried to restart it, couldn't handle it again, and had more problems. The stock did nearly, well, as I look at it right here, about 39 million shares in volume. So a ton of shares trading. Here's the issue, though, and it didn't come out in the first of the Facebook S1 filings, but they amended some of the information. So this is what we knew about Facebook's dependence, or Zynga's dependence on Facebook, or Facebook's dependence on Zynga. We'll call that codependence. So we knew that last year 12% of Facebook's revenue came from Zynga, the largest source of revenue from any one source, the only one they even broke out. And that seemed like a lot. But in subsequent filings, here's what we found out. There was another Zynga dependence, and that was ads that took place on Zynga pages. So if you're playing Farmville on Facebook, not only is Facebook paying Zynga, or Zynga paying Facebook, I'm sorry, as part of their Facebook credits, but also Facebook's deriving ads. So if Zynga were to go away, they would lose not just 12%, but 19% of their revenues. And Zynga has made it very clear they're moving away from Facebook, developing games off of Facebook, trying to have a business that's not on Facebook. So that is yet another risk to the Facebook business that became clear and more clear over the course of this roadshow in the pre-IPO time. So that's a reason why there's concern that if Facebook doesn't do well, Zynga doesn't do well. If the potential for growth is not infinite for Facebook, same goes for Zynga. Emily?
Oh. Thanks, Corey. Diversification, that is the key. Now, joining us to help better understand Facebook's app economy and its future in mobile is past CEO and co-founder Dave Morin, who joined Facebook back in 2006, where he was the senior platform manager in charge of convincing app developers to do something unprecedented, and that was build on Facebook's platform. I mean, today it seems like a given, but back then, when you started this, nobody knew what would happen.
Nobody, you know, when we started the platform, even up until the day that we launched it, we weren't sure how it was going to go. And, you know, I think we launched with around 24 million users and a handful of partners. But within the first 2 or 3 days, you know, some developers were gaining 1 million new users in 24 hours, which was kind of astounding.
Mark has this vision now that someday every single app will be connected to Facebook in some way. Is that too grand, or is that possible?
Not necessarily. You know, I think that the one thing that Facebook has done really well is become this identity platform. You know, people feel comfortable now using their real name and their real identity on the internet. And Facebook sort of is now the fundamental social and identity infrastructure. It's almost like a driver's license for the internet and, you know, how you connect to your friends. And so I think that plugging that into everything is really, you know, it's really only just begun.
Now, it's not necessarily free. I mean, Facebook does charge. How do you see Facebook's relationship with developers evolving? Do you see them tightening control at some point, or charging a toll?
I don't think they'll charge a toll. I mean, I think they do charge a toll on credits and things like that. But in terms of distribution and just building out the core pieces of social, I don't see a toll being necessary there over the long term.
What about mobile? I mean, Path is now all mobile. Facebook has some challenges in mobile. It has yet to make money there. How do you see them tackling that?
Well, I think the neat thing about the mobile opportunity is that it's about 4 or 5 times larger than the desktop or the web opportunity ever was. You know, there are about 1.5 billion personal computers in the world. There's about 5.5 billion mobile subscribers. So the opportunity is obviously very large, and I think they're paying attention to it. Obviously, their presence there is huge, but I do think they have a long way to go in terms of both the user experience and the developer experience.
How about privacy? Obviously, Facebook has had many a privacy blunder over the years. Path, of course, has had its own issues, which you've worked out. What sort of lessons have you learned, and what lessons do you see Facebook learning down the road?
Well, the endeavor of building social applications and social networks is really one of helping people to share and connect, share information of new kinds, right? And so I think that endeavor always involves sort of pushing people with new experiences and sort of helping them share new kinds of information. And so you inevitably end up having a pretty strong conversation about privacy. And sometimes it ends up in a place where consumers are very uncomfortable and you may not have even known it. And so I think the most important thing to do is just to be transparent and have like an open and honest conversation about it, and do the right thing and do it quickly.
You've known Mark since the very early days. You still know him quite well. How do you see his leadership style changing, or not, now that the company is public?
Well, I think, we were all in our 20s.
He's still in his 20s.
Yeah, I mean, I'm 30 now, 31. But we were all kids building this company and learning a lot. I always say that it was really one of the most massive periods of growth for me. And I've seen Mark really grow and mature over the years, and he's really become an incredible leader. And he's really a great inspiration towards the idea of long-term, going after the long term. Facebook's been a really long-term company. It's been 8 years, and as well as staying focused on your product and your vision. And those are things that drive us at Path every single day.
What was it like for you today, watching the IPO? I'm sure you've seen some of the coverage. Seeing your former colleagues celebrate like that.
Well, I think it's obviously a momentous day. As sort of a person that's deeply involved in the internet business, I think this is sort of it's a pretty great day. It sort of shows that the internet has matured over the last 10 years since the early 2000s, and it's really become a really true, very large business, and you can build really neat and truly lasting companies. And so I think that's a really cool thing. But I think everybody's really excited, and it's obviously an important moment for any company.
Speaking of the next 10 years, I mean, Path is in many ways a competitor to Facebook. Do you think there will always be room for both a Path and a Facebook?
Certainly. I think Facebook does this amazing job of being this general social fabric, that we all plug into. And a big macro thing that I see going on right now is companies focusing on different bits of social context. We really focus a lot on family, on your closest friends. There's other applications like Nextdoor that focus on neighborhoods, Pair that focuses on just the relationship with a couple. And so I think Facebook really provides the fundamental platform for companies like ours to exist.
All right. Well, we'll keep our eye on all of it. Dave Morin, thanks so much for stopping by.
Anytime.
Great to have you. Coming up, Facebook's IPO created many new millionaires, but one drawback to a windfall like that, taxes. A lot of them. Coming up, we take a look at how much the state of California expects to bring in from Facebook, the public company. Welcome back. I'm Emily Chang. California is home to some of the world's largest companies, including Google and Apple, but it's also home to a state budget deficit of nearly $16 billion, and the state needs the tax windfall that could come from Facebook's IPO. Our Corey Johnson sat down earlier today with California State Controller John Chiang to find out how much the state expects to make.
Hopefully, it's going to be incredibly positive. The estimates by the Legislative Analyst's Office provide over the next 2 years that the state hopes to collect in excess of $2 billion.
Our state is looking at a $16 billion deficit. Is this a drop in the bucket, or will this actually make a dent in that?
Well, it all helps. California got into its fiscal difficulties because a lot of bad decisions which were both big and small. So $2 billion is not a small chunk of change, but we still have a long way to go to repair the state's fiscal health.
Part of the deal with this IPO is it seems to be very much structured with taxes in mind. Not only was Mark Zuckerberg selling his shares, or I should say exercising his options, and selling a bunch of shares so that he could pay off his tax bill for option exercise. There's also the lockup in the stock was accelerated, allowing people, insiders, to get out of their stock during this calendar year. Is there concern on your part that rising tax rates out of Sacramento is causing people to want to get their money out of the state as quickly as possible?
It is a concern. One of the things we have to do, and the sooner we do it, the better, is to fix California's tax structure. We have an antiquated tax system that was created last century. Our sales tax was created in the 1930s. Our income tax authority was created in 1929. California today is heavily dominated by the service industries, and so we really need to update our tax code, and also to make sure it's globally competitive. We have huge tax credits that are available for R&D companies, but also that pushes the obligations to some of the smaller medium-sized businesses that don't engage in R&D. We're going to have to come up with a much fairer system to all businesses so that California can once again grow its economy.
All right, but wait a minute. But the issue right here is about capital gains and long-term capital gains. Do you want to see that rate go up or down?
What I'd like to do is see a fundamental tax structure that's balanced. So one of the things we have to decide is where are we going to place the onus. California has higher income taxes rate. We do have a higher nominal corporate tax rate. For a lot of the larger, especially multinational corporations, they have a lower effective rate because of the huge tax credits we provide. So we're going to have to go through all three legs of the stools of the tax structure of California, so it's more in balance, so that we can get the revenues we want and we create the economic activity that is essential for California's fiscal health.
But I'm seeing a disconnect here, because on one hand you're agreeing that the rush to get this IPO out the door is people trying to avoid a higher tax rate, and yet you're saying we still need to raise that capital gains tax rate on those high net worth individuals.
Well, I didn't say that we have to raise the capital gains. I said we need a fair tax structure. One of the things we have to do is we have to look at all the tax credits that we are providing, whether it's income taxes and corporate taxes, and see if it makes sense to continue to provide those tax credits. And if we lose some of those tax credits, it gives us the ability to reduce the top rates so that we have a rate that's not as puts us in a less competitive position.
Yeah, I think the competitive position is an interesting one. I occasionally run into entrepreneurs who move to Nevada or move to Washington State to avoid that state income tax whatsoever when they cash out those stock option positions. Is that something of particular concern to you? Is it because more important to the state with deals like Facebook, as if there's ever been a deal like Facebook?
It continues to be a growing concern. One of the 80-plus boards that I serve on is the Board of Equalization, which is California's quasi-tax appellate authority. We've had quite a number of cases of individuals who spend part of their time in California, spend part of their time in Nevada or elsewhere to try to reduce their income tax obligations.
That's California State Controller John Chiang. Now, it is hoped that Facebook's billions will also help buoy the local economy and, in particular, employment. Silicon Valley unemployment is at 9.3%, already below the state average of 11%. And up next, stick around for the BUS Bite, one number that reveals a whole lot. And now it's time for the BUS Bite, where we focus on one number that tells a whole lot. Corey's here. John's down at Facebook in Menlo Park. What's the bite today?
Negative 23%. And that is the average decline of two companies that were seen as Facebook vehicles, ways for public investors to buy stock in something that owned a lot of Facebook. And the companies were SVCC is the ticker of the First Hand Technology Fund, once a mutual fund, now a closed-end fund, Kevin Landis' fund, Kevin, a friend of the show. And Michael Moe was on our show today, his GVC Capital. People were buying shares of that, thinking they could participate in this IPO, and in fact, that stock tanked today on this news.
It certainly will be interesting to see where it goes from here, John. Any word down there, what people are expecting?
You should have seen hoodie stocks today, Emily. I mean, wow. I thought Corey said we're the show that doesn't talk about stocks.
Mark Zuckerberg can never not wear a hoodie now, ever.
Lululemon, there's the opportunity there to even do anything more ridiculously priced.
All right. Thanks, John. Thanks, Corey. Thanks, all. It's been a long week, an exciting week. So have a wonderful weekend, and we'll be back Monday.